Good afternoon, VV Nation. Welcome to our YouTube channel for Trending Thursday. Glad to have you here. And I want you in the room to type in VV Nation. VV Nation, stand up, be heard, be seen. This is an awesome place to learn about what stocks are making news in the market and how to use the power of the VectorVest software to analyze them. And, the news is the news. We get caught up in the news. We get caught up in what people say about stocks that are in the news. And this is a good place where you can take that information or take that data and sift it down to usable information. So for all of you who are here, I want to say thank you for being here. And I want to put one other thing. Ooh-wee. That's right. VV Nation, stand up today. We want to say thank you for being here and supporting the channel. If you're brand new to the VectorVest channel, by all means, please look below the screen. And I want you to subscribe to the channel, especially if you like the content. We still have more people here watching that are not subscribed to the channel than are subscribed to the channel, which I find that kind of interesting. All right, so you show up, you like it, but you haven't subscribed to the channel. All I'm asking you, if you really like the information, you like the content, support the channel. Within the last month or so, we have grown by leaps and bounds, and that's all because of you. So we want to keep that going on. My name is Glenn Tompkins. I'm a senior instructor here at VectorVest. Been here for about 16 years, and that does not make me a genius. It doesn't make me an expert, but everything I've learned about the market came through the usage of the VectorVest software. All right, so before we get started, we do have a guest here today, new from our Ohio office, Clayton DeBert. Clayton works now part of the education department in Akron, Ohio. He is a young guy who's really full of spunk, and he's got a lot to show in regards to how to effectively invest in the market. So what I want to do is I want to invite all of you who have children who haven't taken advantage of learning about the market, or all of your grandchildren who you're trying to get interested in the market. Clayton is the guy that you're going to want to have them listen to. And he's going to talk a lot about how to invest in the market as a brand new person to the market. So you can feel comfortable in knowing that your children that you have him talk to, or your grandchildren, they're going to be put in the right place to learn how to effectively start to invest in the market. And he's going to have a new segment here on YouTube. Right now, I believe they are going to be recorded sessions. So as long as you subscribe to the channel and you click on the bell icon, you will be alerted to when his presentations go up. And I've known him for a couple of years. He's an outstanding individual personally, but I've watched him grow with the knowledge base of understanding the software and how to teach people how to apply it. So I want everybody in the room to give him a warm welcome. I give him a warm welcome, and I think that you're going to be extremely, what's the word? You're not going to be disappointed in what he has to offer. And today, as I go through the stories that we do, I'm going to have him chime in and talk from the perspective of a brand new investor in the market. You know the way we do. We look at a lot of technical things, but I think today is a good day where we scale back a little bit and we get into understanding how to do it from a real person or a real new person's perspective. So before we get into the market, let me bring Clay on. Clay, you can say a couple of words before we get started.
All right, thank you so much, Glenn. And yes, as Glenn said, I am a real person, so you're going to get a perspective from a real person today.
Wow.
But no, more importantly, guys, hopefully I can bring a new take onto some of the stuff that we look at, because we know by now that a lot of you guys, especially if you are VV Nation, you've seen the program, you know how to analyze stocks, you know what VectorVest is capable of, but there are a lot of people out there who just get overwhelmed. They look at a stock, they look at a news article, and they're overwhelmed immediately. They don't know if it's a good thing that stocks are going down, if it's a bad thing that stocks are going down. So hopefully I can just bring a new set of eyes and a different perspective to things.
Excellent. So again, folks, Clayton DeBert, that's going to be a name that you're not going to want to forget. And like I said, he's going to be awesome at what he does. So what we do every week is we always start off with what's going on in the market. So I'm going to bring up the market timing graph. Oh, Clayton's not on that one. That's what you just said.
That's what I just said.
So go to the other one.
Or you can just go through it real quick.
No, all right. I'll just go through it real quick. All right. So what's going on in the market? Market's down. All right. If we go look at our major indices, all of the major indices are down right now. All right. Everything. The Dow is down over 1,400 points. The NASDAQ is down over 3 points. So if I look at it, the Dow in and of itself is pushing 5.5% down. The NASDAQ pushing 4% down. The S&P pushing a little bit more than 4.5% down. And our VectorVest composite is down over 4%. This is a big down day. And we're going to talk about a little bit what's going on in the market from that perspective. Our market timing gauge, which is our daily traffic light into the market, today now has one red light. The color guard is mildly bearish. VectorVest does not advocate buying stocks at this time. And none of you out there should have been blindsided by this. We've been talking about the market being toppy for 2 weeks. For 2 weeks. So with that being said, nobody should have been blindsided. You shouldn't have had a ton of money in the market. Number one, you should have been defensive on your long positions. Number two. So with that being said, we're going to get into why the market is doing what it's doing. But red light in the color guard pricing column for the first time in a long time, the primary wave is down. This is an opportunity for you to start to think about taking advantage of the market to the downside. With that being said, looking at our stocks, we track over almost 8,200 stocks. Of those stocks, we have 3,390 buys, 562 sell recommendations, but now 4,244 holds. The market was on fire. Right now, the fire might have been quenched for a little bit, but we understood what was going on and why this was going to happen with the market being toppy. So with that, let's start talking about the first news story. And the first news story that we have, let me bring that up over, there you go. The first news story that we have is the Fed sees interest rates staying near zero through 2022. The GDP bouncing to 5% next year. So a lot of what was going on with the Fed's information yesterday is that interest rates are going to stay the way they are. We still have a strong economy compared to all of the other economies around the world. All right, so keeping that in mind, and the Fed says they're not thinking about raising interest rates. They're trying to keep the economy the way that it is. And the Fed, and I say this over and over, the Fed's got the spigots wide open. They are still buying our debt. In addition to the rates move, the Fed said it would keep buying bonds targeting $80 billion a month in treasuries. That's a bunch of money, and $40 billion in mortgage-backed securities. So put those two things together, folks. The Fed is buying our debt, and at an interest rate as low as it is, when we got to go pay it all back, when we got to go pay, we're still sitting between 0.25%. But it's probably not going to help the banks much at all, right? So that is the main story that I wanted to bring in, is the Fed meeting yesterday, and that's huge in regards to the interest rates. That is huge in what we're going to do going forward. So let's go back into the VectorVest software, and let's go to our watch list for today. We'll go to our watch list viewer. We'll go to YouTube Trending Thursday. These are the stocks that we're looking at for today for 6/11. All right. Here's our stocks. And the first two that we look at after we look at what's going on in the market is we look at the VVC for those of you who are VectorVest subscribers. And for those of you who are not VectorVest subscribers, to keep you on board with what's going on in the market, why not look at the spiders or the SPY? So we're going to look at the VVC and the SPY. I have them both highlighted in my watch list of stocks today. I'm going to right click and I'm going to view the stock graph. Now, just to keep you all informed, we are now podcasting as well. So with that, as I start to walk through these graphs, I'm going to keep in mind that some of you may be listening by way of podcast, so I'm going to try to be as descriptive as I possibly can so that even if you couldn't join us here live, that you're still going to get the feel of being here live. As we look at the S&P 500, on our graph, we look at a 20-day exponential moving average, which is depicted by a purple line on the graph. We can see that between yesterday and today, the market is gapped down tremendously, and currently the S&P 500 is currently trading below the 20-day exponential moving average. We can also look at the relative timing on the S&P, which tells us if the market is in an uptrend or not. We are still in an uptrend because RT, which is cast on the scale between 0 and 2, is currently still at 1.45, but it is trending down as the price of the S&P 500, again, is trading below the 20-day exponential moving average. So, keeping that in mind, the spiders or the S&P 500 is still in an uptrend, but with today's big gap to the downside, we were already preparing you before now to keep and tighten stops on the stocks that you were in. So when this gap hit today, hopefully you were not grossly adversely affected, because you should have already had tighter stops on your stocks. Now, that's for those of you who are not subscribers. For those of you who are VectorVest subscribers, the same thing. How about for 3 days in a row, now the market has gone down with the big gap today, and the VectorVest composite is currently trading below the level of the 20-day exponential moving average. RT is pulling back as well, not as high as it is on the S&P 500. On the VectorVest composite, it is at 1.17. So the market is still in an uptrend, but not as fast in an uptrend as the S&P 500. Keep in mind, though, the S&P tracks 500 stocks, whereas the VectorVest composite tracks almost 8,200 stocks. So there will be a difference. But given what the market, what we talked about, the recovery right now from the Fed says it's going to take a lot longer than anticipated. We also have a ramping up again of COVID-19 cases. And I'm going to put my own little 2 cents out there. I think that with COVID-19 ramping up again, I think that we're going to be hard pressed to lock the country down again. I don't think that the country can withstand another lockdown again. But this is what's happening. The market took off from the March 23rd low. Everything was rocking. Even stocks that you thought shouldn't be moving were moving because people were looking for places to put money, because the market was running. So you look at what the Fed says, we look at the ramp up of the COVID-19, and I don't think that the news that the recovery is going to take a lot longer than anticipated resonated well with investors. And before you start thinking about panic selling, let your stops manage your trades. Let your stops manage your trades. So that is my overview on the market. On my next story, I'm going to bring Clayton in. But does anybody, or Joey, is there any questions in regards to the market overview right now?
Nothing particular to the market overview, but Leonardo says, what is the best time to invest? When the price of the stock is far away from the 20-week moving average, or when the stock price is just over the 20?
So a good question is probably answering the question of a moving average crossover. You see right here, and again, for the people on the podcast, you won't see this. But for the people who are here live, I'm going to show you something. Here's the 20-day exponential moving average. Question is, when is the best time to buy? My first answer is going to be when a stock's price, in the case the market, price goes above the 20-day exponential moving average and starts moving up. Now, as the market has been moving, you say to yourself, well, I want to buy into it. All right, you buy into it as it's above the 20-day exponential moving average. How do you protect yourself? You put stops. In this case, this is on the market, but if this were a stock, you would put stops on it, and I would look to see if the price fell back below the 20-day exponential moving average. When that happens, that's probably a good time to get out of the stock. But for an early entry, when the stock's price first moves above that level of the 20-day exponential moving average. That's a great question. Any other questions, Joey? No? All right, so I'm going to close out of the graphs. That's to give you a sense of what's going on. Now, if I go back to the home page, my first thing I'm going to tell you is don't panic sell, folks. If your stops are getting you out of the stocks, let it happen. And let it happen. That way, you're going to put yourself in a better position to not hold on to stocks longer than you need to. But don't panic sell. Don't go sell everything. If your stops are still holding you in the stocks, then let your stops manage the trades. Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.